Up to this point, you have learned how a QLAC raises the bar with respect to being a tax-advantaged annuity. But there are even more advantages to having a QLAC in your retirement portfolio. Many of these you have already heard me discuss when I was talking about the deferred income annuity pros and cons. In this video, I'm going to talk about the QLAC pros and cons as an option for income for life and retirement insurance, in addition to being a great retirement income planning tool and a tax planning strategy. By the end of this video, I'll give you the facts so that you can make an informed decision about whether a QLAC is the right fit for your retirement portfolio. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post a new video. As with my previous videos, I'm going to start with the QLAC advantages first. And I want to start off talking about something that I talked about at the end of my previous video. I mentioned that you are guaranteed 100% principal protection with a QLAC. So that is not true for a deferred income annuity. You can get 100% principal protection from your deferred income annuity, but you have to structure the contract as such. Whereas with a QLAC, it is automatic. So let me just give you an example. If you pass before you start receiving those guaranteed income paychecks from your QLAC, your beneficiary will receive 100% of the principal invested in that QLAC contract in a lump sum payment. A QLAC also provides you contractually guaranteed and predictable income paychecks. So that means even in the midst of a market downturns, you're going to continue to receive those paychecks, maybe even for life if it's set up like a longevity annuity. And the amount of those paychecks is not dependent on what's going on in the market. A QLAC annuity is set up so that it's simple and easy to understand, very transparent, with no annual fees. You can also do some legacy planning with your QLAC, and the fact that a QLAC is included in a qualified plan, an employer plan such as a 401k, 403b, or a government 457b, it's actually enabling younger people to start planning for their future income needs. A QLAC also allows you to defer for up to 15 years or the age of 85, whichever comes first, which offers you the potential to get even more guaranteed income benefits because you're deferring it, in addition to tax benefits so that you don't have to pay those required minimum distributions on the amount of your QLAC. Now, as I mentioned with a deferred income annuity, and it's true for a QLAC, you can actually add additional deposits to your QLAC during the deferral period that weren't initially negotiated. But keep in mind that those are capped off at 25% of the total amount you have in all of your qualified accounts, or $130,000, whichever one is higher. A QLAC does cover a single life and a joint life, and I had previously mentioned that I do recommend covering a joint life with a QLAC because of the tax mitigating benefits that a QLAC can provide you and your spouse. In addition, the inflation protection is automatic on a QLAC. So I'm not sure if you remember, but for a deferred income annuity, you actually have to purchase an inflation rider called a COLA, which is a cost of living adjustment, which is going to cost you an additional fee, where you automatically get that inflation protection. Typically, the inflation adjustments are in $5,000 and $10,000 increments. Leave me a comment in the section below and let me know if knowing that you get an automatic inflation protection on your QLAC makes a QLAC more appealing for you for your retirement portfolio. And if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you can receive notices anytime I post a new video. Now on to the QLAC disadvantages. So as is true with a deferred income annuity, there is a lack of liquidity. There are no lump sum payments while you're receiving those guaranteed income paychecks. You get those paychecks month to month. I did mention with respect to 100% principal protection that if you pass and you have not received 100% of your principal returned to you, your beneficiary will receive a lump sum payment, but you will not receive a lump sum payment during the contract period. It is a rigid contract, just like a deferred income annuity. You have to know that this is what you want for your retirement when you signed that QLAC contract. I mentioned earlier as a QLAC advantage that you don't have to deal with those pesky market downturns. But unfortunately, as a QLAC disadvantage, you don't get any of the upside market potential. So this is a fixed annuity. It is based on a fixed interest rate. We are at historically low interest rates, which means it's not a great product for growth. Also keep in mind, you cannot include this in a non-qualified account. And with respect to qualified accounts, which are the employer benefit plans, many employers are not including QLACs in the employer plan, but I do think that that is subject to change in the near future. And again, because a QLAC is a fixed annuity, it is not included in a fixed indexed annuity or a variable annuity. If you are interested in ensuring your income and therefore your retirement, and you like the idea of having a QLAC annuity in your retirement portfolio to help you mitigate taxes early on in your retirement, be sure to click the link below to apply to become my client. Also, if you enjoyed this video, give me a thumbs up, subscribe to my YouTube channel, hit the notification bell so that you can receive notices anytime I post a new video. Be sure to share with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.